Since 1450, only 6 countries or empires have had the honor of their currency being the most frequently traded one. First, it was Portugal, Spain, Netherlands, France, Great Britain, and then the US dollar has dominated since 1920. But the interesting trend with all of them is that their reign only lasted for a period of roughly 100 years. So if history is any indicator of what will happen, then the US dollar is bound to fall off any time now. Therefore, China's rise to prominence in recent decades seems like it's going to inevitably take over the US with the yuan and dictate global markets for the foreseeable future. With this also comes the question of how sustainable globalization is at such a rapid scale, and if other developing economies can mean a volatile market for the US. Today, we'll explore those questions to ultimately see if history is bound to repeat itself and whether yet another global power is set to fall to the wayside. During the Industrial Revolution, England's dominance in industrialization and trade led to the pound becoming the world's reserve currency, supported by the gold standard. Meanwhile, the US emerged as a global power after the 2 world wars, being able to lend money to Europe and gradually taking over from the UK as it also began losing colonies and its influence. The US dollar subsequently became the world's reserve currency, partially due to its abandonment of the gold standard in 1931. However, the US dollar was officially crowned the world's reserve currency and was backed by the world's largest gold reserves thanks to the Bretton Woods Agreement. Instead of gold reserves, other countries accumulated reserves of US dollars. So, also needing a place to store their dollars, countries began buying US Treasury securities, which they considered to be a safe store of money. But the Bretton Woods Agreement would eventually be abandoned due to mounting economic pressures, including a balance of payment deficit, military spending, and inflation, which led to its collapse in 1971 when US President Richard Nixon suspended convertibility of the US dollar to gold. The system was seen as unfair by other countries, and its breakdown paved the way for the modern floating exchange rate system. This sentiment that the system was unfair and dictated by the US is due to America's ability to freeze other countries out of the economy entirely through the use of sanctions, something that still happens, mind you, and is why China and other countries want to reduce the power of the dollar. Now, speaking of China, their rapid economic growth since the 1970s has been attributed to various factors such as large-scale capital and foreign investment, productivity growth, the growth of the private sector, and policy incentives, meaning that more money was being invested into China, and China responded by ramping up productivity, hence why most of the things in your vicinity probably say made in China. Anyways, the introduction of the open door policy in the 1980s allowed for private enterprise to develop, resulting in increased entrepreneurship and business growth. Today, private businesses make up 70% of China's GDP. Moreover, China's investments in infrastructure, including high-speed rail, highways, and ports, have facilitated trade and economic growth, and the country has also invested in its education system, producing a highly skilled workforce that has contributed to its economic growth. And with this growth, it's inevitably reached the heights the Americans have been sitting at for quite some time, and China is not interested in being in second place. So like I said, the goal is to undermine the strength of the dollar, but as it turns out, the dollar is entrenched in so much of the world's currency reserves and how the economy runs in the first place. However, China is trying to work around this fact in 2 ways. First off, China's Belt and Road Initiative is one way they've tried to reach other markets and gain favor. Most of these countries are developing ones, and if this initiative can help bolster their economies, then China's got a friend in them. Most notably, China's been doing a lot of legwork in African countries to help build infrastructure like roads, buildings, bridges, and by lending money. However, an apparent issue with this is that some of these countries are corrupt and either won't or can't return the money given to them. Meanwhile, the BRICS countries, including Brazil, Russia, India, China, and South Africa, have taken steps to reduce reliance on the US dollar by promoting their own currencies, establishing the new development bank, which is just another version of the IMF, and creating the BRICS payment system, which is another version of SWIFT. However, internal rivalries such as China and India's frequent border skirmishes and China's ambition for global economic dominance may drive a wedge between the countries in the long term. While BRICS may have short-term economic benefits such as bolstering trade, without a unified BRICS currency system, they will struggle to threaten the dollar, which raises a question: would China compromise their dream of taking over the US dollar with a BRICS currency system? Probably not. It's also worth mentioning that China is the world's largest maritime trader, and recent disruptions in international trade like the Ukraine war or Iran and the US seizing oil tankers in the Gulf can affect the Chinese economy greatly, but I'll let Peter Zeihan explain more on that.
So next time we do get a meaningful interruption to international energy flows, the United States basically closes its borders to energy trade, it's self-sufficient within North America, and the Chinese are at the very end of a very long supply line that they have no hope of protecting, and that means they'll deindustrialize, and that means it's the end of China's unified nation state.
In the best case scenario, China will probably only be able to raise the yuan to a point where it diversifies the economy and the currency countries choose to trade in, but not enough to topple the dollar entirely. This could serve as a benefit to countries who are hurt by American sanctions and have to resort to other currencies to trade in. That way, countries like Iran, who have tensions with the US, could swap to the yuan and still keep the lights on. So while China does have the money and determination to be a global superpower, as of now it's more of a paper dragon. Therefore, it doesn't look like history is set to repeat itself anytime soon, which is quite a testament to how capable and powerful the United States really is. But if you want to keep up to date on all things related to geopolitics, the economy, and technology, make sure to subscribe to Profit Protection and like this video to show your support. In the meantime, you might want to check out our other video on why China's Ponzi-like property market is eroding faith in the CCP. As for now, we hope you enjoyed today's video and we hope to catch you in the next one. Until then, I will be seeing you.